So the blue is where you want to type. Everything else you don't need to add. It's all automatically calculated. So you want to go through the current conditions. This is just to set your mind right. If it's a bear market, add it as a bear market. If it's a bull market, add it as a bull market. This is going to frame a lot of your trading. Then you want to add in your portfolio. So maybe you've got $10,000 that you play with and you invest, or maybe you've got $100,000 or whatever. That's fine. So let's do 20,000. So that's your total cash value of your portfolio. And then you want to add the percentage of your portfolio that you're willing to invest. So for me, I would usually say 80%. So that means I have 20% at all times in cash. Now, this is just two general position sizing guides. I see it takes the total amount, the 20,000, and it would say if you're trading the full account, a 7% risk is a $1,400 loss, an 8% risk, $1,600 loss. And then on your position sizes, I've got maximum position sizes here that align with these risks. So if I buy Ethereum and I set a stop loss 8% under my entry, so I buy Ethereum for 100, and correct me if I'm wrong, but I set my stop loss at $92. I know that on a max position of this size, my loss is $200. Keeping my total loss, this number here, the difference between entry and stop loss as per position size, will be $200, and that will be less than or equal to 2% of my total trading account. So this is a good way. This is rules I stick to, right? Most of the time, it's just a little quick guide, but like if I'm wondering how much money I'm going to invest, I look here, my max position size, and I know that I can't risk more than 8% on that trade. 7% or 8%, because that's quite a loose stop loss, right? And some people get confused. They think that the 2% rule means that you can never have your stop loss more than 2% away, but that's obviously not true. You can have your stop loss 20% away, but just your position size has to be smaller. So this is a little guide that I use, and you can change this around so it suits you. Maybe you take a lot of 20% moves. You just need to make sure that your number here is a lot smaller. All right, and then we've got the current portfolio, which is empty at the moment because I haven't added in the trades, which I will shortly. Then we've got some more information here, levels of support, resistance. You can see a lot of blue here, so this is for you to enter yourself. Risk reward stuff, trading plans. I think the best way to start will be we'll add in an entry, hey? All right, so I'm buying Bitcoin. And I'm going to buy it on the 1st of January. 1st of January 2020. I'm going to be long Bitcoin, and I'm going to buy 5. And in 2020, I know for a fact that the price of Bitcoin will be $40,000. No, I'm just joking. Let's just say it's $5,000. Oh, 10 grand, because that's nice and mathematics. So then you can see what gets automatically calculated. It's got the value of the position and the average cost break even of the coin. So what's cool, I might make this 4, and then we'll go in by Bitcoin on the 2nd. So we make a second entry here, and this is where it gets really cool. 2020, and we're going long again, and we're buying one coin at a price of $12,000. Now it updates your actual average cost break even, that's pretty awesome. That's really important because a lot of people average in and average out of positions, and you never know what your average cost is. So you can add up to a lot of entries there, 7 different entries on the same trade, because this is all one trade, and it'll tell you what your average position cost is, and it'll tell you the value of that. Now, let's jump back in here and see what's going on. All right, so let's update this because I took on a $50,000 trade on a $20,000 account, which is is quite difficult. All right, so we've got a $100,000 portfolio now, 52% of our portfolio. This is not good for rules. This is just an example and demonstration of the sheet. So it's going to tell you how much a 1% loss is and how much a 2% loss is of the entire position. And it's going to calculate all the way up to an 8% loss. So that's just all automatically calculated information that you can look at. Now, it's showing you the maximum risk at 8%. So if you enter this position, $52,000 of your capital, 5 Bitcoin at average price of 10,400, 8% risk. So your stop loss now is 8% under. You're actually losing more than 4% of your capital. Again, this is really cool, right? This shows you it's automatically calculated, so you can just see, wow, all right, I should not enter that much. I need to take my size back. I need to go back in here, and I'm actually only going to buy 1 Bitcoin, so it's more reasonable. And you come back to your portfolio, and it's like, nice. If you have an 8% wide stop loss, and of course you can change this, whatever works for you. If you have an 8% wide stop loss, you're only risking 1.76 of your total trading capital. Fantastic. And then it shows you all of the different randomly calculated numbers there as well. And what a 1% loss looks like, 2%, out like that. Now, this is where it gets pretty awesome, but a little bit complex. So the current price, so our average price was $11,000. So let's say the current price is where we're doing well and it's at $13,000. Pardon me, the weekly support happens to be at 10,000. The daily support is at 11,500. And then this is optional for you to add more or less support levels. So this is, combine this with your screenshots in Asana and you can start to map out your trade. So this is all done pre-trade. This is where you, all right, these are the support levels. This is how I'm doing this trade. So you might also have another support up at, or maybe you're going to take a low support at 8,000, which you think is key for some level, and you don't need a full support. So, all right, now you need to know your stop loss level. So your entry price was 11,000. You can use this to know where you should put your stop loss. Like if I'm going to lose that, divide that by the coins. I might put my stop loss $500 under. So my stop loss level is 10,500. And now that automatically calculates. You're actually risking $500, which is 4.55% of the value. That's a 4.5% underneath stop loss. So a 10% is going to be pretty much 10,000. I hate when I have to do mathematics on the fly. I was close. There's a 9% loss. All right, guys. So that's that. You can see I've got a risk of $1,000. My stop loss level is, I shouldn't have updated that actually, because it all automatically calculates. You update it here. There we go. Cool. And now you can also add in stuff like all-time high. And it'll show you where the current price is from all-time high. It'll say 10% down is 18, 15% is 17, and the current amount from the current price, which you added here at 13,000, it's 35% down from all-time high. So that's just a cool little feature. Now we're getting into figuring out a risk reward for the trade. So we add in the current price again. The weekly resistance is 14,000. The daily resistance is 13,000, so we're actually at the daily resistance now. Resistance 1 was 12,000. And we're not adding resistance 2. And our target level, it's going to be a long-term trade, so our target level is 14,000. All right, so now we have our risk and our reward, and it shows you the percentage of that. So if we reach our target level of 14,000 from our initial entry of 11,000, we're going to make $3,000 per Bitcoin with a reward of 27.27%. Now, to work out the risk versus the reward and the multiple, it's all done for you. So it takes the risk amount and the reward amount, and it gives you your risk reward multiple. So if you risk $2,000, you're making $6,000. So you have a 3-to-1 risk reward multiple. So that's pretty cool. I really like that's a lifesaver for me, rather than having to calculate it all out myself. I can easily just sit down and know my risk, reward, and the multiple. And it depends on a lot of things. I'm not going to tell you there's no golden rule here, but the higher the better. Aiming for 3, 3 to 4 is good. Anything above 4, there might be something going on. It might be quite a low probability trade, but if you can find high probability trades above 4, fantastic. Take as many of them as you can. So that is that section. Now we've got our trade, our open position. We've got all of this different information, our portfolio sizing, where all of our stops are that we need to watch, where all of our supports are, where all of our resistances are, where our target is, stop loss, risk reward. It's all there. Now, if we want to close this position, what we need to do is we need to copy this. So Command C, if you're on Mac, and then you just want to delete it because this is our open positions. And then you're going to go over here and you're going to paste it. Awesome. Now, what you can do, is you can separate them out a little bit. That way you... Cool. That way you've got a bit of separation. So this becomes your trade log. Now, I'm working on an automated system to bring that across. Someone that's much better at Excel than me, I know for a fact, is going to be able to smash that. But I want to be able to figure out how to close those positions and have them come across automatically in here. And I'm sure that won't be too hard. And I'll probably, by the time I finish recording this video, I'll have already done it. So this is probably the most important part, right? This is the log where you can see all of your trades. Were they winners? Were they losers? And how much? So everything here becomes manual entry. You have to write down what the close price was. So the close price could have been, and this is a group of trades. So it's up to you. You can mark them separately, do them together. That's fine. You say that close price was 13,000. It did hit your target, and you made, see, mathematics on the fly again. You made like 27% or something like that, and it's green, and that calculated incorrectly. So it's on some. That's why. All right, well, that's not accurate anyway. So I'll fix that after this demonstration. Cool. All right, guys, so now you've got data here that you can then calculate down the bottom. And you can use, I made 20%, lost 10%, made 27%, and this will just be a little tally that goes on all the way down. And you'll extend this, and you'll be able to look back over time and see your total percent gain and loss. And that is absolutely massive, right? To be able to see that, you know if you're in the red, you know if you're in the green, and then you can come through and you can see the individual trades that were the problem. Then you go the date, you go back to your Asana, you go to your closed trades for that date, and you look at it. That's how easy it is. And that's how powerful it is when you combine all of these tools together. So I hope that gives you a good little overview of this sheet. Customize it, make it your own. I've certainly done that, and I would encourage you to do the same. I think it's a pretty invaluable tool. All of this stuff is extremely helpful. And I hope you really like it, and I hope you get a lot out of this. I should talk about paid tools. This is obviously a free tool. If you want to pay money for it, you can use Edgewonk. That's probably, as far as I know, that's the best trading journal there is online. It's got heaps of really good insights that you can use as well. So this is for the people that just want the free version, and the people that want to do the paid stuff. People that probably trade full time, maybe hit up Edgewonk because they're really good. Now, I've also added my trading checklist here. You can never have your trading checklist in too many places. I'd probably print it out and put it over my entire laptop screen if I could, because it's insane how much emotions do try and take over. But if you've got your checklist, you're going to be one step ahead as long as you stick to it. Checklists are good if you stick to them and useless if you don't. And then trading plan is simply a link back to your trading plan. So that's everything with the trading journal, guys. You've now got your trading plan. Well, let's start even further than that. You've got your goals. You know where your life is going. That's pretty powerful. Then you've got your trading plan. So you know what kind of trader you are, what rules you're going to stick to, and how you're going to trade. Then you've got your journal and your checklists and your rules so that you know that you're going to stick to that plan every single time. Then you've got your Asana where you've got everything recorded. You can go back and look at all of your charts, update all of your goals, and keep your life on track. All right, guys, so that is it for this course. I'm really grateful for you to sit around and watch it, because I think a lot of this stuff is super important for not just trading, but for your entire lives as well. And I really hope that you get a lot out of it and you can really use it to maximize your entire lives and dominate in the markets, because these are the tools you need. When you've got them, it's simply a matter of using them to improve. All right, thanks again for tuning in, guys, and I'll be talking to you soon.